Based on the provided data for Bitcoin, a short-term investment strategy appears to be the most suitable approach. The recent price history demonstrates volatility, with fluctuations both upwards and downwards. However, the one-week price forecast suggests a slight downward trend. This indicates a potential opportunity to capitalize on a short-term price correction. Therefore, the investment strategy would involve entering a short position at the current market price, which is around $94,600. A stop-loss order should be placed at $95,300 to limit potential losses if the price unexpectedly surges. The target price for this trade would be $94,000, aiming to profit from the anticipated downward movement. This strategy leverages the potential for a short-term price dip while mitigating risk through a well-defined stop-loss order. Based on the provided price information for Bitcoin Cash, a cautious investment strategy with a medium-term perspective appears most suitable. The 2-week price history exhibits volatility, with fluctuations both upward and downward. The forecast suggests a slight dip in the coming week, but the historical data shows a general upward trend. The support price at $437.50 indicates a potential floor for the price, while the resistance at $465.80 suggests an upper limit for near-term growth. Considering these factors, a long position could be initiated around the support price of $437.50, aiming to capitalize on potential upward movement towards the resistance level. The stop-loss should be set slightly below the support price, around $435, to minimize potential losses. The target price could be set at $460, allowing for a reasonable profit margin before reaching the resistance. This strategy balances risk and reward, taking advantage of the potential for growth while mitigating potential losses. Based on the provided information for stacks, a short-term bearish strategy appears most suitable. The 2-week price change demonstrates a fluctuating pattern, while the 1-week forecast suggests a downward trend. The current price is hovering near the resistance level, indicating a potential for a pullback. Therefore, a short position is recommended, aiming to capitalize on the anticipated price decline. An entry price of $1.56, aligned with the current price, would be appropriate. The stop-loss should be set at $1.62, slightly above the recent high, to minimize potential losses. The target price is set at $1.50, slightly above the support level, allowing for a reasonable profit margin. This strategy takes advantage of the short-term bearish sentiment indicated by the price history and forecast. Based on the provided Ethereum price information, a cautious long-term investment strategy appears most suitable. While the 2-week price change demonstrates some volatility, the overall trend suggests a gradual decline. The forecast prices further indicate a continued downward trajectory in the coming week. However, the support price at $3,224.16 suggests a potential floor for the price, making it a good entry point for a long-term investment. Therefore, a long position is recommended with an entry price around the support level of $3,224.16. The stop-loss should be set slightly below the entry price, at approximately $3,200, to minimize potential losses. The target price should be set at a reasonable level above the current price, such as $3,500, considering the historical price range and the potential for future growth. This strategy aims to capitalize on the long-term potential of Ethereum while mitigating short-term risks through a well-defined stop-loss mechanism. Based on the provided Ripple price history and forecast, a medium-term investment strategy appears most suitable. The price history reveals a volatile trend with both upward and downward movements. However, the forecast suggests a continued upward trajectory over the next week, indicating potential for growth. Therefore, a long position is recommended. An ideal entry price would be around $2.40, aligning with the current price and the support level. The stop-loss should be set slightly below the entry price, at approximately $2.35, to minimize potential losses. The target price can be set at $2.60, aiming to capitalize on the forecasted price increase. This strategy balances risk and reward, allowing for potential profit while mitigating potential losses in case the price takes an unexpected turn. Based on the provided information for Binance Coin, a cautious long-term investment strategy appears most suitable. The historical price data reveals a general upward trend, although with some fluctuations. The recent price drop suggests a potential correction, but the forecast indicates a gradual recovery. The support price at $685.69 acts as a strong floor, while the resistance at $729.76 presents a potential ceiling for the near future. Therefore, I recommend a long position in Binance Coin with an entry price around $690, a stop loss at $685, and a target price of $720. This strategy capitalizes on the long-term bullish outlook while mitigating risk by setting a stop loss below the support level. The target price is set slightly below the resistance, allowing for potential profit-taking before encountering significant selling pressure. Holding this position for several weeks or months could potentially yield favorable returns as Binance Coin continues its upward trajectory. Based on the provided information about Stellar, a medium-term investment strategy appears to be most suitable. The historical price data shows a general upward trend, with recent fluctuations indicating potential consolidation before further growth. The forecast price also suggests a positive outlook, with prices projected to rise above the current levels in the coming weeks. Considering this, a long position is recommended. A prudent entry price would be around $0.425, slightly above the current price and below the resistance level. The stop loss should be set at $0.392, the recent support level, to limit potential losses. The target price can be set at $0.471, the resistance level, aiming to capture the potential upside movement. This strategy allows for a balanced approach, capitalizing on the positive outlook while managing risk effectively. Given the price trends and forecast for Toncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The price is currently near its support level of $5.208, suggesting potential for further drops. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An ideal entry price would be $5.32, aligning with the recent price action. The stop loss should be set at $5.40, protecting against any unexpected price recovery. The target price should be set at $5.15, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $5.208. Based on the provided Cardano price information, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with both upward and downward movements. While the forecast suggests a slight decline in the short term, it also indicates a potential for upward movement in the medium term. This suggests a sideways trend with potential for a breakout in either direction. A long position is recommended, capitalizing on the potential for a price increase towards the resistance level. An entry price of 95 cents could be considered, aligning with the current price and offering a potential upside towards the resistance of $1.0929. The stop loss should be set at $0.883, the support price, to mitigate potential losses. The target price could be set at $1.05, offering a reasonable profit margin before reaching the resistance level. This strategy allows for participation in a potential upward trend while managing risk through a defined stop loss. Given the price trends and forecast for Litecoin, a moderately aggressive investment strategy would focus on a medium-term approach. The historical prices show a slightly fluctuating trend with a recent upward push, while the forecast indicates a continued upward movement towards the resistance level. The support price sits at $101.36, offering a potential safety net, while the resistance is at $104.77, suggesting a potential ceiling for the near term. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price around $103 would allow you to buy in near the current price and benefit from any upward momentum. A stop loss could be set at $101.50 to limit potential losses if the price drops below the support level. The target price could be set at $105, aiming to capture a reasonable profit before the price potentially reaches the resistance level. This strategy allows for a balance between risk and reward, aiming to capitalize on the expected price increase while mitigating potential losses. Based on the provided data for Doge-Coin, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a clear upward trend, with recent fluctuations suggesting consolidation rather than a significant reversal. The forecast indicates continued upward momentum, with prices projected to rise above the current resistance level. Therefore, a long position is recommended. An ideal entry price would be around $4.95, allowing you to buy in at a relatively attractive price point while still capturing potential upside. Setting a stop loss at $4.75 would help protect against unexpected market downturns. The target price could be set at $5.30, aligning with the forecast and providing a healthy profit margin. This strategy allows you to capitalize on the anticipated upward trend while managing risk effectively. Based on the provided Aptos price information, a cautious investment strategy focusing on the short term appears most suitable. While the historical price data shows a general upward trend, the forecast suggests a potential decline in the coming week. The support price at $8.69 serves as a crucial level to watch, as a break below this level could signal a more significant downward movement. The resistance at $11.86, although distant, highlights the limited upside potential in the near term. Considering these factors, a short position on Aptos is recommended. A conservative entry price could be around $9.10, allowing for some room to maneuver while aligning with the forecast. The stop loss should be placed slightly above the entry price at $9.25 to minimize potential losses. The target price could be set at $8.70, aiming to capitalize on the anticipated price decline while staying above the support level. This strategy allows for a measured approach to the market, taking advantage of potential short-term volatility while mitigating risk. Given the current price trend and forecast for SE, a short-term bearish investment strategy appears to be the most suitable. The historical price data shows a consistent downward trend, and the forecast indicates further declines in the coming weeks. The support price is at $0.3761, acting as a potential floor for the price, while the resistance is at $0.4021, suggesting limited upside potential. A short position allows us to capitalize on this anticipated decline. Therefore, an aggressive short-term investment strategy would involve entering a short position at $0.400, slightly above the current price to allow for a small margin of error. The stop loss should be set at $0.414, the recent high point, to protect against any unexpected upward price movement. The target price should be set at $0.370, a conservative level below the support price, aiming to secure profits before the price potentially rebounds. Based on the provided Ethereum Classic price data, the strategy suggests a short-term bearish outlook. While the historical prices have shown some fluctuations around $25, the forecast indicates a downward trend, with prices potentially dropping from the current level towards the support price of $24.93. This suggests that the short-term market sentiment for Ethereum Classic is bearish. Therefore, an aggressive short-term investment strategy for Ethereum Classic would involve taking a short position. An ideal entry price would be around $25, aligning with the current price and the predicted downward movement. The stop loss should be set at $25.25 to limit potential losses if the price unexpectedly rises. The target price could be set at $24.75, aiming to capitalize on the anticipated price decline while leaving room for market fluctuations. This strategy leverages the short-term bearish forecast for Ethereum Classic, aiming to profit from a potential price drop towards its support level. Given the price trends and forecast for Polygon, a short-term cautious investment strategy is recommended. The historical prices show a slight downward trend in the past 2 weeks, and the forecast indicates further declines. While the support price sits at $0.4494, the forecast suggests the price could drop below this level. Therefore, a short position is advisable to capitalize on the potential price decline. An entry price of $0.463 would allow you to enter the trade near the current price level. The stop loss should be set at 47 cents to minimize potential losses if the price unexpectedly rebounds. The target price should be set at $0.445, slightly above the support level, allowing you to take profits before the market hits major support. This strategy prioritizes risk management and aims to capture short-term price movements. Based on the provided price history and forecast for AEVO, a cautious short-term investment strategy is recommended. The historical price data shows a recent decline, with the forecast predicting further downward movement. The price is currently close to the support level of $0.3236, indicating a potential for a bounce. However, the forecast suggests that the price may fall below this support level in the coming week. Therefore, a short position is advisable, aiming to capitalize on the anticipated price decline. An entry price of $0.335, near the current price, would be suitable. The stop loss should be set at $0.343, slightly above the forecast's lowest price, to limit potential losses. The target price could be set at $0.324, the support level, allowing for a modest profit while minimizing risk. This strategy prioritizes risk management and capital preservation in a potentially volatile market. Based on the provided price history and forecast for optimism, a short-term investment strategy appears most suitable. The price history demonstrates a fluctuating trend with recent dips, while the forecast suggests a continued downward trajectory. This suggests a bearish outlook for the short term. Therefore, an aggressive short-term investment strategy would involve taking a short position on optimism. A suitable entry price would be $1.82, aligning with the recent price action. The stop loss should be set at $1.89 to protect against potential upward movements, and the target price should be $1.75, aiming to capture the anticipated decline towards the support price. This strategy capitalizes on the short-term bearish sentiment indicated by the price trends and forecast. Based on the provided price history and forecast for STRK, a cautious short-term investment strategy appears most suitable. The historical prices show a recent downward trend, and the forecast predicts continued declines over the next week. While the support price at $0.4289 offers a potential floor, the resistance at $0.4684 suggests limited upside potential. Given this bearish outlook, a short position is recommended to capitalize on the anticipated price drop. An ideal entry price for this strategy would be $0.450, slightly above the current price and close to the resistance level. This allows for a buffer against potential short-term price fluctuations. The stop loss should be set at $0.460 to limit potential losses if the price unexpectedly surges. The target price, aiming for a conservative profit, could be set at $0.430, slightly above the support level and in line with the predicted price decline. This strategy allows for potential profit while managing risk within a short-term timeframe. Based on the provided Solana price data and forecast, a short-term investment strategy appears most suitable. The 2-week price history reveals a volatile trend with both upward and downward movements. While the recent price action has shown some upward momentum, the forecast indicates a potential pullback in the coming week. This suggests a cautious approach, aiming to capitalize on short-term price fluctuations. Therefore, a short position on Solana is recommended. An ideal entry price would be around $192, aligning with the recent price action and the forecasted downward trend. The stop-loss order should be placed at $196 to limit potential losses if the price unexpectedly surges. The target price for this trade could be set at $187, aiming to capture a potential profit from the predicted price decline. This strategy takes advantage of the short-term volatility while mitigating risks through a well-defined stop-loss order. Based on the provided price history and forecast for Jupiter, a cautious investment strategy leaning towards the short term seems most suitable. The recent price action shows a downward trend, with the forecast predicting further declines. While the support price is at $0.7942, the resistance is at $1.1208, indicating a potential for price consolidation rather than a strong upward movement. Therefore, a short position is recommended. An entry price of $0.816, slightly above the current price and near the recent peak, would allow for potential profit from a price decline. The stop loss should be set at $0.853, above the recent high, to protect against unexpected price surges. The target price can be set at $0.7942, the support level, aiming to capture a significant portion of the potential downside movement. This strategy prioritizes risk management and capital preservation while capitalizing on the anticipated downward trend. Considering the historical price of render and its forecast, a short-term investment strategy appears to be the most suitable approach. The price has shown some volatility recently, but the forecast suggests a slight downward trend over the next week. This suggests an opportunity to capitalize on a potential price dip. Therefore, an aggressive short-term strategy could involve entering a short position at the current price of $7.36. The stop loss should be set at $7.545, slightly above the recent resistance level, to minimize potential losses if the price unexpectedly rises. The target price could be set at $7.044, the support level, aiming to capture a decent profit from the anticipated price decline. This strategy capitalizes on the short-term bearish outlook suggested by the price forecast while managing risk effectively. Based on the provided price data for Solana name service, the historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines in the coming week. The price has fallen from $0.275 to $0.216, and the forecast suggests it could drop further to $0.202. The support price is at $0.2002, indicating a potential floor for the price. Given this bearish outlook, a short position on Solana name service appears to be the most suitable strategy. To implement this strategy, we can enter a short position at $0.229, aligning with the first forecast price. The stop loss should be set at $0.2441, the resistance price, to limit potential losses if the price unexpectedly rises. The target price should be $0.2002, the support price, allowing for a profit if the forecast holds true and the price falls to the predicted level. This strategy capitalizes on the anticipated downward price movement of Solana name service and aims to generate profits by taking advantage of the bearish trend. Given the price trends and forecast for Doge-Coin, a medium-term investment strategy focusing on a long position appears promising. While the historical prices exhibit some volatility, the overall trend suggests upward movement. The forecast indicates a slight decline in the short term, but a gradual recovery is expected afterward. The support price of $0.33436 provides a solid base for potential buying opportunities. Therefore, a long position is advisable to capitalize on the anticipated price increase towards the resistance level of $0.35872. An entry price of $0.335 could be considered, aligning with the support price and allowing for a potential profit margin. A stop loss at $0.325 would protect against significant downside movements, while a target price of $0.360 could be set to capture a substantial portion of the potential upside. This medium-term approach allows for a balance between risk and reward, aiming to benefit from the anticipated upward trend in Doge-Coin. Given the provided price history and forecast for PEPE, a short-term investment strategy appears most suitable. The recent price history shows volatility, with a slight downward trend in the past 2 weeks. The forecast indicates a continued downward trend over the next week, suggesting a bearish outlook in the short term. Considering the support price of $0.0000171 and the resistance price of $0.0000193, a short position seems prudent to capitalize on the potential price decline. To implement this strategy, an entry price of $0.0000186 could be considered, aligning with the current price and the forecast's initial downward movement. A stop loss could be set at $0.0000193, just above the resistance level, to limit potential losses if the price unexpectedly rises. The target price would be $0.0000171, aiming to capture the potential drop towards the support level. This approach allows for a relatively quick trade, taking advantage of the short-term bearish outlook while managing risk effectively. Given the price trends and forecast for SHIB, a cautious investment strategy would focus on a medium-term approach. The historical prices show a slight upward trend, with the current price hovering near the support level of $0.0000211. The forecast suggests a potential for modest growth, with prices expected to reach around $0.0000225 in the coming week. However, the resistance level at $0.0000241 indicates that significant upward movement might be limited in the short term. Therefore, a long position is advisable to capitalize on the potential for a moderate price increase. An entry price of $0.0000215 could be considered, allowing you to buy in at a relatively low point. A stop loss at $0.0000211, slightly below the support level, would help protect your investment from significant downside risk. The target price could be set at $0.0000225, aligning with the forecast and allowing you to realize profits before encountering potential resistance. Given the price trends and forecast for Dog with Hat, a cautious investment strategy would focus on a short-term approach to navigate the anticipated price decline. The historical prices show a clear downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests Dog with Hat could drop from its current price to as low as $1.35, while the support price sits at $1.558 and resistance at $1.859. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For a cautious short-term investment strategy, an entry price of $1.75 would be ideal, aligning with the recent price action and allowing some room for potential price fluctuations before the market moves towards the predicted lower levels. The stop loss should be set at $1.80 to protect against any unexpected price recovery. The target price should be set at $1.45, slightly above the forecasted lowest price, allowing you to take profits before the market potentially bounces off the support level. Based on the provided historical price data and forecast for Doge-Coin, a short-term investment strategy appears most suitable. The historical prices show a recent decline, with the current price hovering near the support level of $0.006294. The forecast also suggests a further decline in the coming week, indicating a bearish outlook. Therefore, an investment strategy involving a short position on Doge-Coin is recommended. An entry price of $0.00649 could be considered, aligning with the current price and allowing for potential profit as the price moves towards the forecasted lower levels. A stop-loss order should be placed at $0.00684 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.00608, slightly above the lowest forecasted price, allowing for profit-taking before the price potentially bounces back. Near Protocol's price history shows a recent dip followed by a slight recovery. While the forecast suggests a continued downward trend, the support price at $4.985 offers a potential floor for the price. Given this mixed outlook, a short-term investment strategy with a focus on risk management appears prudent. A long position is not recommended due to the bearish forecast. Instead, a short position could be considered with an entry price at $5.15, slightly above the current price. This allows for a small margin of safety while still capitalizing on potential downward movement. The stop loss should be set at $5.36, above the recent high, to limit potential losses. The target price could be set at $4.99, aligning with the support price and providing a reasonable profit target. This strategy aims to capitalize on the short-term downward trend while minimizing risk through a well-defined stop loss. Based on the provided Internet Computer price history and forecast, a cautious investment strategy focusing on the short term appears most suitable. The historical price data demonstrates a slight upward trend, but the forecast predicts a period of stability around the $10 price level. This suggests a lack of significant upward momentum in the near future. Considering this outlook, a long position is not recommended at this time. Instead, a short-term neutral strategy might involve waiting for a price dip below the current level before entering a short position. The entry price could be around $9.90, the stop loss at $10.159, and the target price at $9.80. This strategy aims to capitalize on any minor price fluctuations within the predicted stable range. Based on the provided information for Injective, a short-term investment strategy appears to be the most suitable approach. The 2-week price history demonstrates a general upward trend, but the forecast suggests a slight pullback in the coming week. The current price is near its resistance level, indicating a potential for a short-term correction. Therefore, a short position would be recommended, entering at a price of $25, which aligns with the resistance level and the potential for a downward movement. The stop loss should be set at $25.94, the highest resistance price, to protect against any unexpected upward price surges. The target price can be set at $21.16, the support level, allowing for a potential profit if the forecast of a price decline materializes. This strategy aims to capitalize on the short-term correction while mitigating risk with a well-defined stop loss. Given the provided price data and forecast for BTC, a short-term investment strategy appears most suitable. The historical prices show a downward trend over the past 2 weeks, with the forecast suggesting further declines in the coming week. The current price is hovering near the resistance level of $450, indicating potential for a pullback. Therefore, an aggressive short-term strategy would involve taking a short position at the entry price of $450. The stop loss should be set at $464, slightly above the forecast high, to limit potential losses. The target price would be $434.40, the support level, aiming to capitalize on the anticipated price decline. This strategy leverages the bearish momentum indicated by the price history and forecast, seeking to profit from a short-term price correction. Based on the provided price history and forecast for THETA network, a short-term bearish strategy appears to be the most suitable approach. The 2-week price change demonstrates a downward trend, and the forecast further suggests a decline in price over the next week. The current price is hovering near the resistance level, indicating potential for a pullback. Therefore, an investment strategy focused on a short position would be advisable. A suitable entry price would be $2.30, aligning with the current price and the resistance level. The stop loss should be placed at $2.39, slightly above the recent high, to minimize potential losses. The target price could be set at $2.15, taking into account the forecast and the support level. This strategy aims to capitalize on the anticipated price decline while managing risk effectively. Given the price trends and forecast for WorldCoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent upward movement, but the forecast suggests a potential pullback in the coming week. The price is currently near its recent resistance level of $2.42, indicating that a correction might be imminent. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $2.35 aligns with the forecast and allows for a potential profit margin. The stop loss should be set at $2.45 to protect against any unexpected price surge. The target price should be set at $2.15, slightly above the support level of $2.129, allowing you to take profits before the market hits major support. Based on the provided price data for Hooked Protocol, a cautious investment strategy is recommended due to the recent downward trend and the forecast indicating further declines. The historical prices show a consistent downward movement, with the current price hovering near the support level of $0.3672. The forecast suggests that hooked protocol could drop further, reaching as low as $0.353 in the coming week. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve entering a short position at the current price of $0.379. The stop loss should be set at $0.391 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.367, aligning with the support level and allowing for a modest profit. This strategy aims to take advantage of the short-term downward momentum in hooked protocol while mitigating risk through a well-defined stop loss. Based on the provided price information for Artificial Superintelligence Alliance, a cautious long-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with both upward and downward movements. However, the forecast price suggests a slight downward movement in the coming weeks. While the support price at $1.30 provides a safety net, the resistance level at $1.362 indicates potential for limited upward movement. Therefore, a long position is recommended with a conservative approach. An entry price of $1.32 aligns with the current price and allows for potential upside if the price rebounds towards the resistance level. The stop loss should be set at $1.30, below the support price, to minimize potential losses. The target price can be set at $1.36, slightly below the resistance, allowing for reasonable profit while mitigating the risk of a significant price reversal. This strategy focuses on capitalizing on any potential upward movement while minimizing risk through a well-defined stop loss and a conservative target price. Based on the provided data for Polkadot, a short-term investment strategy appears most suitable. The historical price shows fluctuations but generally trends downwards over the past 2 weeks. The forecast price also suggests a continued decline in the coming week, indicating a bearish outlook. The support price of $6.587 acts as a potential floor for the price, while the resistance price of $7.711 suggests an uphill battle for Polkadot to break through. Therefore, a short position on Polkadot is recommended. An aggressive entry price could be around $6.75, aligning with the recent price action and allowing for potential profit if the forecast holds. A stop-loss order should be placed at $6.85 to minimize potential losses if the price unexpectedly surges. The target price could be set at $6.59, aiming to capture a portion of the anticipated decline towards the support level. This strategy allows for potential profit while mitigating risk through a defined stop-loss order. Filecoin's recent price history shows a fluctuating trend with a slight upward movement. The forecast suggests a continued upward trajectory, with prices potentially reaching $5.28 in the coming week. The support price at $4.917 provides a cushion for potential dips, while the resistance at $5.974 indicates a potential ceiling for the immediate future. Considering these factors, a long-term investment strategy in Filecoin appears promising. Based on the provided information, a suitable entry price for a long position would be around $5.15, slightly below the current price and above the support level. This allows for a margin of safety while still capturing potential upside. The stop loss should be set at $4.95, just below the support price, to minimize potential losses. The target price could be set at $5.75, aiming for a significant but realistic gain based on the forecast and historical price movements. This strategy allows for a balanced approach, capitalizing on the potential upward momentum of Filecoin while managing risk effectively. Based on the provided Conflux price data and forecast, a short-term bearish strategy appears most suitable. The historical price data reveals a recent downtrend, with the price dropping significantly from $0.177 to $0.146. The forecast further strengthens this bearish outlook, projecting a continued decline in the coming week. The current price sits close to the support level of $0.1462, suggesting potential for further downward movement. Therefore, a short position on Conflux is recommended. An entry price of $0.148, slightly above the support level, allows for a small margin of safety while still capitalizing on the anticipated decline. The stop loss should be set at $0.1562, the resistance price, to limit potential losses if the price unexpectedly rebounds. The target price can be set at $0.144, slightly below the lowest forecast price, aiming to secure profits before the price potentially finds support. Based on the provided price history and forecast for Ethereum name service, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a recent upward trend, but the forecast suggests a slight pullback in the coming week. The current price is relatively close to the resistance level of $33.01, indicating a potential for a short-term correction. Therefore, a short position on Ethereum name service is recommended. An entry price of $32.80, slightly below the current price, would allow for a small margin of safety. A stop-loss order should be placed at $33.50 to limit potential losses if the price unexpectedly surges. The target price could be set at $31, anticipating a moderate decline towards the support level. This strategy capitalizes on the potential for a short-term pullback while managing risk through a well-defined stop-loss order. Given the price trends and forecast for Avalanche, a medium-term investment strategy focusing on a long position appears to be suitable. The historical prices show a recent upward trend, with the current price hovering near the support level of $36.33. The forecast suggests a slight upward movement in the coming week, indicating potential for further gains. Therefore, a long position on Avalanche is recommended. An entry price of $36.80 would allow you to buy in at a price slightly above the current support level, minimizing risk. The stop loss should be set at $36.33, aligning with the support price, to protect against potential price drops. The target price could be set at $42, aiming to capitalize on the forecast's upward momentum and reach the resistance level. This medium-term approach allows for potential profit generation while mitigating risk through a well-defined stop loss. Given the historical price data and the forecast for Vecane, a medium-term investment strategy appears to be the most suitable approach. While the historical prices show some fluctuations, the overall trend suggests a sideways movement with a slight upward bias. The forecast also indicates a potential for consolidation around the current price levels. This suggests that Vecane might not experience a significant breakout in either direction in the short term. Therefore, a medium-term investment horizon allows for capturing potential price movements within this consolidation phase. For this strategy, a long position is recommended. The entry price should be around $0.0455, slightly above the recent lows, and close to the support level of $0.04446. The stop loss should be set at $0.0445 to minimize potential losses if the price drops below the support level. The target price can be set at $0.052, aligning with the recent resistance level of $0.05243. This target price provides a reasonable upside potential while keeping the risk-reward ratio favorable. Given the price trends and forecast for PENDLE, a conservative investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price near the support level of $3.722. The forecast suggests PENDLE could drop further, reaching as low as $3.64. This indicates a bearish outlook in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. For a conservative short-term investment strategy, an entry price of $4 would be suitable, slightly above the current price and the predicted low. The stop loss should be set at $4.20 to protect against any unexpected price recovery. The target price should be set at $3.60, allowing you to take profits before the price potentially rebounds. This strategy aims to capitalize on the short-term bearish trend while minimizing risk. Given the price trends and forecast for the sandbox, a moderately aggressive investment strategy would focus on a short to medium-term approach to capitalize on the anticipated price movements. While the historical prices show a recent upward trend, the forecast suggests a slight downward correction in the coming weeks. The current price is close to the resistance level of $0.6951, indicating potential for a pullback. The support price at $0.5423 provides a potential buying opportunity if the price dips. Therefore, a long position is advisable, aiming to buy the dip near the support level and ride the potential upward momentum towards the resistance. A suitable entry price would be around $0.560, allowing you to buy below the current price and potentially benefit from the upward trend. A stop loss should be set at $0.542, protecting your investment from significant losses if the price drops below the support level. The target price could be set at $0.650, aiming to capture a decent profit before the price potentially reaches the resistance. This strategy balances risk and reward, taking advantage of the potential for short-term gains while mitigating potential losses through a well-defined stop loss. Given the current price trends and forecast for Decentraland, a short-term investment strategy appears to be the most suitable. The historical price data shows a slight upward trend, but the forecast indicates a potential pullback in the coming week. The support price of $0.4887 provides a strong base, while the resistance level of $0.5921 suggests that further significant gains might be limited. Therefore, a short position is recommended for a short-term investment horizon. An entry price of $0.503, aligned with the recent price action and slightly above the forecast, would be ideal. A stop loss at $0.514, slightly above the entry price, would protect against unexpected price surges. The target price should be set at $0.489, capitalizing on the potential price decline towards the support level. This strategy aims to profit from the anticipated short-term correction in Decentraland while minimizing risk. ENG coin shows a downward trend in the 2-week price change, and the 1-week forecast also predicts further declines. The forecast suggests that the price could drop from its current level to around $0.192. The support price sits at $0.2013, indicating a potential floor for the price. However, the resistance at $0.2162 suggests that the upward momentum is weak. Given these factors, a short-term bearish outlook is more likely. Therefore, an aggressive short-term investment strategy would involve taking a short position on ENG coin. A suitable entry price would be around $0.209, slightly above the support price, to allow for some price fluctuation. The stop loss should be placed at $0.2162, above the current resistance level, to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.196, aligning with the forecasted price and offering a reasonable profit margin. This strategy capitalizes on the anticipated price decline while managing risk effectively. Based on the provided Uniswap price history and forecast, a short-term investment strategy appears most suitable. The recent price history shows a fluctuating trend with a slight upward movement. However, the forecast suggests a potential dip in the coming week, indicating a short-term bearish outlook. Therefore, opening a short position would be a reasonable approach to capitalize on this anticipated decline. An optimal entry price for a short position would be around $14, aligning with the forecast price. The stop loss should be set at $15, slightly above the current price, to minimize potential losses if the market unexpectedly surges. The target price could be set at $13, aiming to profit from the predicted price drop. This strategy leverages the short-term bearish forecast and aims to capture potential gains from a price decline within the next week. The price history of Chainlink reveals a fluctuating trend with recent consolidation around the $20 price level. The forecast suggests a slight downward movement in the coming week, potentially reaching $19. Considering this, a short-term bearish outlook emerges for Chainlink. Therefore, an investment strategy for Chainlink would involve taking a short position, aiming to profit from the anticipated price decline. A suitable entry price would be around $20.20, allowing for some buffer above the current price. The stop-loss order should be placed at $20.80 to minimize potential losses if the price unexpectedly rises. The target price could be set at $19.50, aiming to capture a reasonable profit from the anticipated downward movement. This strategy leverages the short-term bearish forecast and aims to capitalize on the potential price dip. Based on the provided price history and forecast for Aave, a cautious approach with a medium-term investment perspective appears most suitable. The recent price history shows a downward trend, with the current price hovering near the support level. While the forecast suggests a continued decline in the short term, the historical lows are significantly below the current price, indicating potential for a bounce. Therefore, a long position is recommended, aiming to capitalize on a potential price reversal. An entry price around $295, slightly above the current price and below the forecast low, allows for some margin of safety. The stop loss should be set at $285, protecting against further downside, while the target price can be set at $320, aiming for a moderate profit based on the historical resistance level. This strategy balances risk and reward, allowing for potential gains while mitigating losses. EOS shows a volatile price trend over the past 2 weeks, fluctuating between $0.771 and $0.929. Although the forecast predicts a slight dip in the short term, with prices potentially falling below 80 cents, the historical data and support level at $0.7834 suggest a potential rebound. Considering these factors, a medium-term investment strategy appears more suitable. A long position in EOS could be considered, aiming to capitalize on a potential upward price movement towards the resistance level of $0.9107. An entry price around $0.804, the recent low, provides a good entry point. To manage risk, a stop-loss order could be placed at $0.7834, the support level, limiting potential losses. The target price could be set at $0.9107, the resistance level, aiming for a substantial profit if the price surges. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses. Based on the provided price history and forecast for Tron, a cautious short-term investment strategy is recommended. The recent price history shows a downward trend, and the forecast indicates further declines over the next week. The support price of $0.2404 suggests a potential floor for the price, while the resistance at $0.2547 indicates a significant hurdle for upward movement. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $0.251 could be considered, aligning with the recent price action and the downward forecast. The stop loss should be set at $0.2547 to limit potential losses if the price unexpectedly rises. The target price should be set at $0.2404, aiming to capture a portion of the predicted decline before reaching the support level. This strategy prioritizes risk management and aims for modest profits in the short term. Given the current price trend of Suncoin and its forecast, a short-term investment strategy appears to be the most suitable approach. The price has been declining over the past 2 weeks, and the forecast predicts further downward movement in the coming week. While the support price at $0.02235 might act as a temporary floor, the downward momentum suggests that the price is likely to test this level. Therefore, a short position on Suncoin could be profitable in the short term. To implement this strategy, an entry price of $0.0240 would be advisable, allowing you to capitalize on the ongoing downward trend. The stop loss should be set at $0.0248 to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $0.0225, aiming to capture a significant portion of the anticipated price decline before reaching the support level. This strategy leverages the current bearish sentiment and the forecast for further price drops, aiming to generate short-term profits from Suncoin's anticipated decline.